Okay, excellent. Thank you so much. I'd like to thank Ripple University Blockchain Research Initiative for the opportunity to be here and for facilitating me joining virtually as well. So I wish I were there in person, but I would welcome anyone reaching out to me by email or on LinkedIn if you'd like to connect and discuss as follow-up. So I will just briefly go over my background so that folks who don't know who I am know what my experience is. I am executive director at Wharton, leading financial technology initiatives across the finance pillar at Wharton. And I previously led the private equity and venture capital program at Wharton and launched and led the Center for Innovation and Finance. And then was on a short-term leave of absence here in Pennsylvania to be Secretary of Banking and Securities. And then upon my return, am in this role leading financial technology across finance at Wharton. So I know the previous presenter mentioned artificial intelligence, and I'll just mention as an aside that that's a focus for me and for our work at Wharton as well, if anyone wants to reach out to talk about it. I sit on the oversight board for the International Telecommunications Union at the United Nations, which oversees AI for Good, the global AI summit and standard setting in that space. And it's something that we're focused on at Wharton, both in the finance pillar and through our corporate accelerator, which will be expanding and looking at AI-based companies this year. But I am pleased today to talk about global digital asset regulation, and I appreciate the previous presenter. This is a topic that we have been working on for some time, and I'll be discussing in some detail a paper that I recently published with my co-author, Professor Brett Falk, who couldn't be here today. He is at the University of Pennsylvania School of Engineering. And so it was a unique opportunity to work with Brett to really unpack what happens on the computer science side of crypto, and then think about the legal framework. But my original interest in blockchain and in digital assets comes from my experience as a trader. I was a trader and portfolio manager for several years at JP Morgan and PIMCO, and then worked in investment strategy at Vanguard as well. So the opportunity to use blockchain for things like clearing and settlement or cybersecurity or AML compliance, I think is potentially very compelling. And it's part of the reason that we're deeply involved in the space at Wharton. So if we can advance the slides, I believe that we can actually advance two. We can go one more. And thank you. It gives you here the URL for the paper that Professor Falk and I published. The publication actually came out this year, but we continue to work on this topic, and we've been working on it for several years, actually. But if you want to see the larger research body that we have created at Wharton, you can go to the Stevens Center website, and you'll see a great deal of research and thought leadership on digital assets and blockchain, including unpacking of issues like the FTX bankruptcy that I'm sure you're all talking about today, stable coins and standard setting around that, regulatory issues, bankruptcy issues. There's quite a lot of resources available on our website. And then I'll mention, because we're talking about a number of different emerging technology issues today, that next week on Wednesday, I'll be leading our Future of Finance Forum at Wharton. And there will be a number of public events that day, including a keynote by Commissioner Caroline Pham from the CFTC. She'll be discussing her global experience in digital assets. That's on Wednesday at 3:35. And then also I'd bring to your attention, there will be a keynote discussion at 12:10 with the three former chairmen of the CFTC, who all of you may know were instrumental in different parts of moving regulation forward on digital assets. So I encourage you to take a look at the Future of Finance Forum URL and note that there are some public events there that will be live streamed. I mentioned the accelerator, so I'm going to move forward to the paper, and you can see here a photo of the paper. But what I wanted to really do is talk about the framework. And what Professor Falk and I focused on in this paper was really very ambitious. And it takes into account a lot of the good points that were made by the previous speaker related to how do we incorporate a strong regime for cryptocurrency for digital assets, while at the same time recognize that this is a different type of technology. And the paper acknowledges that at the forefront by really saying that this is one key policymaking issue of our time, and that we need to recognize that crypto has to be regulated in some ways that are different from traditional securities. Because, for example, one can write a smart contract and leave it on blockchain and therefore have no further individual control over that contract. So, as regulators and policymakers, how do we think about that dynamic? What will be the most effective and what will be the most relevant? And a motivation for really coming to terms with this is what we've seen over the last year plus with issues like the Terra Luna debacle and the crypto crash, and then the FTX scandal, which all of you are reading about in the news this week as well, with the trial taking place. And then the banking crisis and the use of crypto and the different types of deposits and their stickiness certainly has an impact on what's happening in the overall financial system. So these are all issues that we think about when we think about regulation, and that we believe are well incorporated in this paper. So I mentioned how crypto works, and if you take a look at the paper, you'll see in detail really our thoughts on what makes the engineering side of crypto unique. And then we move on to talk about standard setting in financial regulation and examples of standard setting in different areas, not only financial services, but also in computer science for things like HTML, for example. So I think we can advance the slides, and I'm going to talk a bit about the framework itself. And I appreciate the opportunity to do that. But I also want to mention that I'm happy to follow up, since there isn't much time today, with any specific questions about the framework or its applicability. I'll mention also a lot of the regulators have proposed similar frameworks. There is a framework for stablecoins in the European Union. I think the previous speaker mentioned Dubai. The Dubai International Financial Center, where I actually serve as a board member on the innovation board, has a clear framework for crypto that was developed very early on. And then you have jurisdictions like Singapore or Hong Kong, for example, that have innovation centers, and also a very regimented approach to how crypto can be marketed to retail customers. So what we have proposed is an acknowledgement that begins with the fact that we live in a global world, and that the framework has to have several parts. One is certainly based on what we talked about with the engineering side, there needs to be industry standard setting. Industry standard setting is an integral part of capturing the activities in the crypto space. And crypto is certainly not the only place where we have such standards or could have such standards. So in the financial sector, for example, standards are really well known. We have FINRA, for example, which is a self-regulatory organization that sets standards for the financial industry, and in fact, one could argue is very effective. And we also have the Municipal Securities Rulemaking Board, which sets standards around issuance of debt and management for municipal bonds, for example. And in the computer science world, standards are what make computer science work in many ways. So if I were to email all of you an emoji of a happy face, for example, from my Gmail account, and you have something like Outlook, it is actually standard setting in the industry that permits you to receive my email emoji that I've sent you. So that's part of the reason that we think there's a motivation for standard setting in the crypto space as well, because industry understands very deeply what happens on the engineering side and on the business side, and we believe that industry has to be involved in setting standards for crypto as well. Now, we have to also acknowledge that standards have some downsides. They are voluntary. There's no clear enforcement mechanism unless a standard setting organization is given a regulatory mandate. So, for example, in the case of FINRA or other areas in security law, there are self-regulatory organizations that have been given an enforcement mandate by the Securities Exchange Commission. And that's certainly an option in the crypto space as well. By the way, I'm not going to comment on the political environment. I'm sure you all have talked about it throughout the day, but certainly the practicality of passing legislation in the crypto space could be a challenge. And so what we're talking about today is really what we would like to see in the framework. And I'll leave it to experts in the political space to talk about how pragmatic it would be to try to move legislation forward. But I know there are folks working on that, certainly. All right, so I think we can, I'll mention also one more thing before we move forward to the next slide, which is in addition to standard setting, of course, we want to have national regulation. We need to cooperate with international standard setting bodies. And there are very good examples of this. I think one of the examples that we cite is the Financial Action Task Force in the anti-money laundering space, which cooperates internationally, is very deeply involved in standard setting, rulemaking, and enforcement activities. The purpose of citing that is to say we do have examples in the international community of cooperation and collaboration around important issues like money laundering or financial regulation, where that fits in very well with a framework. So as we all know, digital assets are global, and to have an effective standard setting, rulemaking, and enforcement mechanism, we need to be collaborating with international standard setting bodies, whether it's the FSB or the IMF or the Bank for International Settlements. I'll mention also, and you may have already be aware of this, that both the International Monetary Fund and the BIS are working on interoperability. So I believe the IMF is focused on digital currency, whereas currently the BIS is focused on not only digital currency, but also digital assets more generally, or crypto. And that's part of a larger effort to move forward on interoperability so that the various countries, more than 100, who are experimenting with crypto and digital currency will be able to transact with each other. Then the final thing I'll mention before we move forward to the next slide is the states. And states certainly have a role to play in a global digital assets framework. We have seen news recently out of New York about listing requirements for crypto assets. And New York actually early on released some guidance around stable coins as well, including reserve requirements. Having been Secretary of Banking here in Pennsylvania, I can tell you, I think there is certainly a role for states to play in the crypto space. By the way, if you go to the Stevens Center website at Wharton, you'll also see we have done an analysis of all 50 states and their activities in the crypto space. So we can advance slides if that works for everyone. And I appreciate the chance here to talk about consumer protection. So this issue is really top of mind as folks look at what's happening in the news with FTX, and we have already experienced a crypto crash in Terra Luna, and there's a lot of enforcement activity around crypto in the United States and certainly around the world. Setting strong consumer protections, we feel, should be a top priority. And I think this is a really broad construction of what we believe consumer protection has to look like. I'll tell you that we actually reviewed tens and tens of different regulatory frameworks and standards to evaluate what would be a fully comprehensive consumer protection framework for crypto. So it's not just that we sat down and we laid out, these 5 points. These points, it's really that we reviewed large bodies of law to identify what would be the most effective in consumer protection for crypto users. And of that, we identified, several pillars for consumer protection. The first being really that crypto issuers have to be required to act honestly and fairly and professionally, and to identify and disclose conflicts of interest. And I'll mention that we came up with that before the FTX debacle. So one of the items, as you all note, with the FTX bankruptcy is that there were huge conflicts of interest. And certainly there's, allegations of criminal behavior and fraud as well. But FTX issued a loan to Alameda. I believe the size is alleged to be $8 billion. And having shared management and sitting on each other's boards, that was certainly a conflict of interest in itself. The loan was guaranteed using tokens by one of the companies. That's another very significant conflict of interest. And then the fact that there were employees, C-suite level employees of both firms that managed both companies means that the loan certainly wasn't issued at an arm's length decision. So conflicts of interest are, I don't know, the right word would be excessively terrible. And it needs to be a key consideration as we think about what are the right protections for consumers. Disclosures are another one, and this one we have been talking about for some time. So crypto is a unique space in that crypto issuers have disclosures, or they have limited rights posted on their websites often, and they're changed frequently, and they're difficult for users to understand. And you all have probably heard of click wrap. So click wrap or click accept means that when you go to a website, you click a button, and if you want to use the crypto capability, you automatically agree to the terms listed on the website. And we have set here some ideas around what those disclosures should say, and that they should be fair and open, and that they should stipulate what the requirements are around things like reserves for the assets. Then we require that crypto issuers maintain and disclose their governance processes, and that they be very clear. And then we maintain that customer assets have to be clarified in terms of how they're treated in bankruptcy, and then transparency into the model. So I'm almost out of time. But I want to mention one more thing for the folks in the room, which is that I actually taught yesterday at Wharton on the use of blockchain in things like anti-fraud detection or cybersecurity. And one thing that came out, which I believe strongly, is that technology cannot take the place of good governance. There should be good governance in every company and every organization. And having governance in a situation like FTX would have been imperative in detecting the fraud that took place in that case. So we put that forth very strongly in our recommendations here for the regulatory framework. And I'm going to stop there. I think I'm out of time, or almost out of time, but I want to thank Ripple, UBRI again, and all of you for being here today. And I hope that you enjoy the conference.